Hello, I am the Stock Options Hero, and from here on out, I'm going to share with you stock options secrets that only the most successful option traders know. In my videos, you are going to see my secret options trading system that only a handful of people know. And as I'm sure you're well aware of by now, options trading can be very lucrative. However, most options traders are not consistently successful, or even worse, lose money trading stock options. Trading stock options can be a high probability trade if done properly. Let me show you. Now, each day I will record a video where I play simulated options trades. So subscribe to my channel and watch my videos daily to learn how you too can be a successful stock options trader. Disclaimer: these videos are for educational and entertainment purposes only and does not constitute a recommendation to buy or sell any securities or stock options. Before I dive into today's stock options video, I have a small favor to ask. If you like this video or any of my videos, please subscribe to my channel and hit the bell icon so you will see my videos as soon as they are posted. This way, you won't miss out on any paper trading ideas. Tell me in the comments section which option trades you are looking at paper trading, and if you're lucky, I might do analysis on a ticker symbol from the comments section. All right, let's leap into today's video. Welcome to another exciting video of Stock Options Hero brings you 0 DTE options trading strategies. Oh yeah, let's leap into it. All right, so today is June 2nd. I apologize for taking a few days off due to the holiday, but I am back and ready to leap into SPX 0 DTE options trading strategies. So I wasn't at my computer and I tried placing trades through the mobile app with mixed results. So as I've mentioned previously, if you are trading 0 DTE options strategies, you need to watch it intraday, especially around big news announcements. So just using this CNBC article where the Dow soars 700 points after strong jobs report, stocks ahead for winning week. So we've had some significant news in the financial markets, so you need to be fully aware of any major news that is coming out and trade carefully around those dates. So like job reports, Fed announcements, non-farm payrolls, as an example of major news announcements. So today, SPX is having a good day. Just looking at the chart. The range today has been 46.6 on SPX, and I entered a bear call spread when it's trading, I think, right here on the 1205 candle. I put on a 42.90, 42.95 because it looked like SPX at the time was hitting the high for the day, and I thought it had a really significant run up and that there was going to be some profit taking, right? So it looks like SPX is trying its best to trade above the 42.87 level, but it keeps failing. So hopefully this level will stay strong for the rest of the trading day, and the bulls will run out of steam, and the bears will take over and push the price down. So just to show you, I'm short 10 contracts on the 42.90 and long 10 of the 42.95. So, sorry. I took in $1.35, paid out 65 cents, so net credit of 70. So what you can do is go in and put in an open order to close it out at, say, 10 cents. So that will close your exposure. The thing is, you are basically capturing 60 cents. So I took in 70 cents, paying 10 cents to close it, plus commissions. So it'll cost me $123.40 to close it out, or I could just let it ride. So with it being so close to the short strike level, I'm going to put in the closing order at 10 cents because there is greater risk today of it expiring in the money. I would rather get out at a 10-cent debit or pay 10 cents per contract to get out, right? And I'd rather collect 60 cents times 10 contracts than take my max loss, if that makes sense, right? So let's take a look at SPX. So I'm sure some of you are wondering where I might see the S&P 500 going in the near term. So it is obvious looking at this recent breakout, how we had the breakout on May 18th, which failed, and then it rallied and broke up against resistance on May 26th. It then came back and tested the new support level. So it broke up above resistance, came back down, tested the newfound support, and now is bouncing up. So this tells me that SPX is now going to most likely be bullish at least in the near term. So using my linear regression channel, we may even run up to the 4400 price level. And one way you can look, or guess rather, is, let's see, trying to remember how to draw Fibonacci retracement. Not study, show pattern, drawings, tools. Sorry, I don't draw fibs very often on here. So, oftentimes people use Fibonacci retracements to see where the price may go in the future. So I drew it from the most recent extremes from February 2nd and March 13th, right? So the 161.8 level is surprisingly close to this upper LRC level around 43.93. We'll just call it 4,400. So we may see SPX rally all the way up to the 4,400. So in the next, now keep in mind that it took it from SPX from March. SPX was range bound for quite some time. So how long will it take to rally up to 4,400? My guess is probably around a week to a month, depending on how strong this rally. It could be sooner than later, especially depending on how strong the job report came out. I haven't read the report myself, but it could run up in the next few days, for the next week or two, the next month. I don't know. I don't have a crystal ball, but what I can tell you is, moving forward, I'm going to be putting on bull put spreads and not bear call spreads. Right? I like to sell into strength, but with this strong breakout, it is pretty scary. So we were short back here, and now with the breakout, I would suggest being very cautious on taking a bearish position when possible, just to increase the probability of success. Try putting on bull put spreads when SPX is showing weakness intraday, like right here, where it rallied up and then sold off. You could have looked at putting on a bull put spread here, but I could understand why you would be hesitant. But there was a pretty good gap from the close on June 1st to today, which is a bullish indication of future movement. So had you put on a bull put spread, probably could have put it around 42.20, 42.15, and you'd be doing really well right now. So yeah, so my 42.90, 42.95 is getting a little nervous, but I'll just keep an eye on it for the next hour or so until the end of the trading day. And looking at the MACD and the stochastic, it looks like we may get a little bit of a rally before the close, because the MACD is crossing as well as the stochastic crossing to the upside. So my 42.90 short strike is almost in the money, and that is not a good feeling. But I honestly don't see how we're not going to see. We should see some profit taking before the close. When you have a pretty good rally like this, oftentimes you will see a little bit of profit taking within the last 30 minutes to an hour of the trading day. And that's what I'm hoping for at this point of the trading day. Real quick before we end, SPX is the underlier. I've been doing the 0 DTE option trading strategies on, and the PLYTD is up 13,570. Now, at the end, after the 30th day of this exercise, I will show a breakdown of all my wins and losses and give you my opinion on which strategy I prefer, whether I prefer the 0 DTE option strategy or the 45 DTE option strategy. So my option buying power is 100,000, net lick 120.62, cash and sweep 132,988, overall PL YTD 30,320. So far since I've started my channel, my overall profit loss year to date is over 30,000, and that is trading high probability strategies. This is not trading high risk, right? These are relatively low risk option strategies that have at least a 10% return on capital. And I feel like I'm doing very well considering. Definitely outperforming the market at this point. And if you're not able to outperform the S&P 500 with your options trading strategy, you may be better off just investing in a mutual fund or even investing in the SPY ETF if you're not able to outperform it, right? So it really depends on you and your overall objectives. You should consult with a licensed financial advisor or planner. But if you want to be self-directed and take your investing into your own hands, strongly suggest that you paper trade any option strategy before you trade it using real money. And that is exactly what this channel is all about, helping you learn how to trade in a safe, simulated environment. So if you are not already subscribed, please take a moment, hit subscribe and the bell icon, and also put comments below letting me know what content you would like me to record for this channel. So thank you. Have a wonderful day and always happy trading.